Hey everyone, I'm Zach, aka SPAC Zach here, and welcome to my YouTube channel. My goal is to help you guys find the next home run SPAC play. What began as an interest quickly became an obsession with these SPACs. With the increase of SPACs flooding the markets, it became more and more evident that traditional IPOs may slowly become a thing of the past. Now you may be asking yourself, who the heck's got the time to research all these up and coming new SPACs? Well, ask yourself no more. I'm here to present every SPAC on my ever-growing list of special purpose acquisition companies. Hey guys, SPAC Zach here. Welcome back to my YouTube channel, and today we'll be covering ticker symbol TPGY. That is TPG Pace Beneficial Finance, who's looking to merge with private company EVBox. Now guys, please remember that this is not financial advice. I'm not a financial advisor. Please always do your own due diligence when researching these companies and before purchasing any of these stocks. All right, now let's start off by taking a look at EVBox's leadership team. They're headed by CEO Christoph Vernuge. I might be pronouncing that wrong, so I do apologize. But he is the CEO. Now, EVBox comprises of over 650 employees, made up of over 70 nationalities. They have 75 plus hardware engineers, over 175 software engineers, over 150 sales and marketing specialists, as well as 13 global offices. EVBox Group believes that the shift to electric vehicles is rapidly accelerating. Now, here's a little graphic showing some articles that'll back that. You can see the Wall Street Journal stated that California is to ban sales of new gas-powered cars starting in 2035. Reuters, they stated that Germany will require all gas stations to provide electric car charging. So I think that's going to be very big and beneficial to EVBox Group. You take a look here at this graphic, you can see the list of their different products ranging from residential to commercial all the way up to the public and fleet options. So taking a look at EVBox's embedded software technology, they're continuously updating their portfolio to offer future-proof solutions addressing tomorrow's energy infrastructure needs. So if you take a look at their regular charging AC platform, their next generation AC platform allows for car communication, vehicle-to-grid, and cloud-enabled services. If you look at their fast charging DC platform, their next generation DC modular platform significantly decreases maintenance and upgrades spend and improve rate on investment proposition. Take a look at this graphic. You can see some European policy tailwinds. EVBox Group believes that comprehensive legislation on a regional and country level will lead to an inflection point to take up and rapidly accelerate the electrification of the European auto fleet. On the left here, you can see electric vehicle car incentives by country, as well as on the right, you can see electric vehicle charging port incentives. You can see that it's mostly the EU nations leading the way. So I definitely expect to see rapid growth in the European industry like previous charts have depicted. So like I said, EVBox Group is expecting rapid electric vehicle growth. So this graph right here just shows the total expected cumulative EV sales between Europe and the US over the next 4 years. So you can see here that Europe is in blue, US is in gray. Obviously, we're a little bit behind in EV production and purchasing. I definitely expect us maybe in the next 10 years to catch up to them. But you see that this is a pretty linear graph here. So they're steady rising in total EV sales. Definitely expected over the next 4 to 5 years. So if you take a look here at this graphic, you can see the valuation benchmarking for EVBox Group along with its peers. You can see that its enterprise value over revenue for this year, they're looking at about 6.7 times, and for next year, they're looking at about 3.6 times. You can compare that to their peers if you would like. So they're definitely a little bit more fair valued than you'd see from ChargePoint. Basically, all that means is that investors see ChargePoint as being a little more overvalued company. Now, if you guys want, feel free to pause this part of the video to take a look at this graphic showing the differentiation in the EV service market. It's just comparing EVBox Group, the ChargePoint, the company I mentioned previously. So you can obviously tell the main difference between the two is EVBox is primarily in Europe, which is why I think they're poised to do better short term. And then you see ChargePoint primarily North American based. So I think they're definitely poised for growth a little bit further down the line once the US starts to catch up in electric auto sales. And then, yeah, just feel free to take a look at the rest of that chart if you wish. Now, taking a look here at this graphic, we're taking a look at the potential for robust growth as revenue diversifies for EVBox Group. So the charge ports shipped from 2020 to 2023, they're expecting about a 65% compounded annual growth rate. Now, looking at the revenue types, it looks like it's predominantly hardware. Then you got software and services coming in, quite a smaller amount. Then looking at their revenue geography, you can obviously tell Europe is leading in a great margin compared to the United States. Now, taking a look at EVBox's consolidated financial projections, for this year, 2021, they're expecting 72% year-over-year growth. Next year, they're going to bump that up to hopefully 87% year-over-year growth. And then the following year, 2023, they're looking at about 65% year-over-year growth. Now, taking a look down at their gross profit and gross margin percentage, for this year, they're looking at about a 32% gross profit margin. Next year, they're hoping for a 37% gross profit margin. And then 2023, they hope to increase that by 1% to 38%. Taking a look at the one-day chart, you can obviously tell there's a lot of volatility in this stock pre-merger. Just like with all the other SPACs, you typically do see a lot of volatility leading up to the merger date. And then after the merger, typically settles down a little bit. However, this merger is set to happen spring of this year. So just keep that in mind and be on the lookout for that merger date. And now we're going to take a look at the 3-month chart because I believe it gives you a little better overview of what the stock is doing. Now you could see the initial surge upon the rumors of merging with EVBox. And then it got all the way up to about $30 back in December. I believe that was Christmas Eve, December 24th. It hit about $31, and it's been consolidating ever since, as you can see. However, if you compare this company to Switchback Energy, SPE, who's going to be merging with ChargePoint, this company is actually fairly undervalued, like I mentioned previously. So I definitely can see this stock itself hitting that $40 price target before the merger occurs, because that's where we're sitting at with SPE. And this company, they're primarily in Europe where all the electric vehicles are currently being sold. So I think that leaves them a little bit better room to capitalize on profits until, obviously North America becomes a leader where we're going to see the transition moving towards ChargePoint eventually. Thanks for watching my YouTube video today, guys, covering EVBox Group. If you like what I had to offer you, please consider liking, subscribing, commenting, and sharing this video with anybody interested in SPACs. Make sure to stay tuned for my next video. That way you never miss a home run SPAC play.